Welcome to Global Byte. Please subscribe and hit the bell icon for more breaking updates. A quiet but powerful shift is reshaping North America's economic landscape. Beneath the surface of daily headlines, a transformation is underway, one that is changing the way people live, work, and do business across the continent. American companies are packing up and heading north to Canada. Boardrooms that once buzzed in U.S. cities are now emptying, as teams and entire operations make the journey across the border. What began as a trickle in 2025 has become a major current in early 2026. The pace of this migration is accelerating, with more and more businesses announcing their plans to relocate every month. This isn't just about business decisions, it's a redrawing of the continent's industrial map. Entire sectors are shifting, and the ripple effects are being felt in communities large and small. New U.S. tariffs and restrictive immigration policies have pushed businesses out, while Canada has emerged as a beacon of stability. Companies are seeking environments where they can grow, innovate, and attract global talent. For every company that relocates, jobs and opportunities shift from one country to another. Families are moving, communities are adapting, and the workforce is being reshaped in real time. Supply chains are being fundamentally altered, changing the fabric of daily life. Goods, services, and expertise are flowing in new directions, creating both challenges and opportunities for workers and businesses alike. The global stakes are high. American economic dominance is being challenged. The world is watching as the balance of power in North America begins to tilt, with consequences that could echo far beyond its borders. Is this a temporary reaction to political change, or the start of a permanent new reality? Experts are divided, but the momentum behind this movement is undeniable. Startups, manufacturers, tech firms, and even educational institutions are making the move. The Canadian innovation ecosystem is growing, attracting talent and investment from around the world. International investors are watching closely, and the consequences will reshape North America for years to come. The decisions made today will determine the economic future of millions. The Great Northern Migration is underway, and its impact is only beginning to be understood. As the story unfolds, one thing is clear: North America's economic reality will never be the same. For over a century, the US and Canada have shared a deeply integrated economy. Trade agreements like NAFTA and USMCA created a seamless North American market, with goods and capital flowing freely. Companies built complex supply chains, leveraging each country's strengths. Disputes arose, but were usually resolved through negotiation, preserving the partnership's value. This stability allowed businesses to invest and plan for the long term. The idea of American firms leaving for Canada once seemed unthinkable. But even the strongest foundations can be shaken by political change. The current shift marks a dramatic break from decades of cooperation. The 2024 election triggered a seismic shift in U.S. policy. President Trump's administration imposed steep tariffs and aggressive protectionist measures, including on Canadian goods. These policies disrupted integrated supply chains and created costly uncertainty. Retaliatory tariffs from Canada closed off export markets for American goods. Immigration restrictions and visa freezes made it nearly impossible for companies to recruit global talent. The U.S. lost its reputation for stability and openness, forcing companies to seek alternatives. The erosion of trust and predictability became the turning point. For many, Canada became the obvious choice for a more secure future. 2025 marked the true beginning of the corporate migration to Canada. What started as a trickle of companies seeking stability soon became a wave, as businesses across the United States began to look north for a more predictable future. The reasons were complex, but the message was clear. Canada offered something the U.S. no longer could: certainty in an uncertain world. The Siebel Institute of Technology, America's oldest brewing school, moved from Chicago to Montreal due to U.S. visa restrictions. For over a century, Siebel had trained generations of brewers in the heart of the Midwest. But as immigration policies tightened, the school found it impossible to attract the international talent it needed. Montreal, with its open doors and vibrant brewing scene, became the new home for this historic institution. Phillips Distilling Company, facing Canadian retaliation against U.S. tariffs, shifted its sourpuss production from Minnesota to Montreal to survive. The move wasn't just about avoiding tariffs, it was about keeping the brand alive in a changing market. By relocating, Phillips not only protected its bottom line, but also tapped into Canada's growing spirits industry, ensuring its products could reach new customers. Carbon Capture Inc., a climate tech startup, abandoned its Arizona project after U.S. clean energy incentives were cut, partnering with Canada's Deep Sky in Alberta instead. The company saw Canada as a place where innovation in climate technology was not just encouraged, but actively supported by government policy and investment. Alberta's landscape, once known for oil, was now attracting pioneers in green technology. These moves weren't about cheaper labor, they were about survival and stability. For many executives, the decision to relocate was driven by a need to protect their employees, their investments, and their futures from unpredictable policy shifts and economic shocks. Across sectors, American companies are making permanent moves north. From manufacturing to tech, and from education to energy, the exodus is reshaping the business landscape on both sides of the border. Ontario's Launchpad Copac CEO Scott Morrison says, "I don't think they're going to revert back ever again." For Morrison and others, the shift is not just a reaction to current events, but a bet on Canada's long-term promise. These are not temporary adjustments, but long-term strategic decisions. Companies are investing in new facilities, hiring Canadian talent, and embedding themselves in local communities, signaling a commitment that goes far beyond short-term gains. The flow of business in North America is being fundamentally rerouted, supply chains are being reimagined, and the traditional centers of commerce are shifting as companies seek out new opportunities in safer harbors. The trend spans manufacturing, tech, and education. From bustling factories to innovative startups and world-class universities, Canada is becoming a magnet for ambition and growth. Canada is now the destination for companies seeking predictability. Its stable political climate, robust infrastructure, and welcoming immigration policies are drawing in those who want to build for the future. The migration is accelerating, with no signs of slowing down. Each month, more companies announce their plans to relocate, fueling a cycle of growth and innovation north of the border. The business map of the continent is being redrawn, and Canada is emerging as the new epicenter of North American enterprise. Trump-era tariffs were introduced with the intention of shielding U.S. industries from foreign competition, aiming to revive American manufacturing and protect jobs. However, the reality turned out to be far more complicated, and often, the results were the opposite of what was promised. Higher costs for imported components meant that American-made products became more expensive to produce. This made it harder for U.S. companies to compete both at home and abroad, as their goods were now less attractive to buyers due to rising prices. Retaliatory tariffs from Canada and other trading partners quickly followed, closing off key export markets and squeezing U.S. exporters who relied on international sales to survive. Meanwhile, immigration policies added further strain. H-1B visa fees soared, making it more expensive for companies to hire skilled foreign workers. The introduction of a new lottery system increased uncertainty, making it difficult for businesses to plan for the future. The 2026 freeze on immigrant visas for 75 countries made it virtually impossible for American companies to bring in essential talent from abroad, cutting off a vital pipeline of innovation and expertise. The increasingly anti-immigrant climate, combined with mounting regulatory hurdles, drove away not just workers, but also students, researchers, and entrepreneurs who once saw the U.S. as a land of opportunity. As a result, innovation withered in a climate of fear and instability, with many of the brightest minds choosing to take their talents elsewhere. The reversal of clean energy policy was the final blow for many climate tech firms, forcing them to shut down operations or relocate to countries with more supportive environments. Companies like Carbon Capture Inc., once proud symbols of American innovation, found themselves with no choice but to seek opportunity elsewhere, taking jobs and investment with them. The combination of restrictive trade, immigration, and environmental policies created a perfect storm, undermining the very foundation of American competitiveness and growth. Now, as American businesses look north to Canada for shelter and growth, the long-term consequences of these policies are only beginning to unfold. While U.S. policies push businesses out, Canada is actively pulling them in. Canada's stability, predictable regulations, and commitment to trade are a major draw. The global talent stream allows companies to bring in skilled workers in weeks, not years. Financial incentives like the Clean Technology Investment Tax Credit sweeten the deal. Provincial agencies offer loans and support to relocating firms. Canada's welcoming multicultural society makes it easier for companies to convince employees to move. The country's high quality of life and public services are a strong selling point. Canada is not just open for business, it's invested in its success. The message is clear. Here, you can build a future. For many companies, Canada is now the best place to grow and thrive. The corporate exodus is creating ripple effects for both countries. The US faces job losses, shrinking tax revenues, and a blow to its reputation for innovation. Border states and regions with deep Canadian ties are hit hardest. Ontario, for example, could face recession and up to 190,000 job losses if tariffs persist. For Canada, the influx brings investment, jobs and tech innovation, especially in green industries. But rapid growth strains housing, infrastructure, and public services in cities like Montreal and Toronto. Canada's government is already planning to slow temporary resident growth after 2026. The window for easy relocation may be closing. Canada must manage this boom sustainably to ensure benefits are widely shared. Both nations are being transformed by this migration, each facing its own set of challenges. Business leaders and experts agree, trust in the US market has been broken. Launchpad Copac's Scott Morrison calls the shift permanent, not a temporary tactic. Academics see this as part of a global trend toward nearshoring and risk reduction. Canada's stability and resource wealth make it an ideal destination. Immigration advisors praise Canada's global talent stream, but warn that new limits may soon make relocation harder. Industry voices describe their moves as business imperatives, not political statements. The Siebel Institute left for Montreal to support its international students. Carbon Capture Inc. followed policy support and stability north. The consensus US policy has fundamentally altered the risk-reward equation. Canada is now the safer bet for companies seeking growth and certainty. The US-Canada relationship is being redefined before our eyes. The migration of American businesses north signals a deeper divergence in values and economic vision. The US risks losing its industrial base and global reputation for innovation. Canada faces both opportunity and challenge as it manages this influx. The seamless North American market is fracturing, replaced by regionalized supply chains. Short-term pain may lead to long-term resilience and self-sufficiency. The lesson investment and talent flow to where they're most welcomed. North America now faces two very different trajectories. The choices made today will shape the continent's future for generations. A new map of opportunity and power is being drawn in the 21st century.